Are you ready to uncover the truth behind one of the fastest-growing fintech success stories in today's market? In this video, I'm diving deep into the incredible rise of SoFi. Technology is a company whose record-breaking loan growth has taken both Wall Street and Main Street by storm. We're talking about a surge so powerful, it's caught the attention of seasoned investors, new traders, and industry analysts all at once. The burning question is, what's driving this surge, and can it continue? SoFi isn't just another financial company, it's a tech-driven financial powerhouse, founded with the goal of helping graduates refinance student loans. It has evolved into a fully fledged financial ecosystem. Today, SoFi offers banking services, mortgages, personal loans, investment tools, credit cards, insurance, and even cryptocurrency trading, all in one app. That super app approach is something most traditional banks haven't cracked yet, giving SoFi a clear competitive edge in attracting younger tech-savvy customers. The company's stock performance has been equally remarkable. Over the past year, SoFi's share price has seen major upward momentum, boosted by strong earnings reports, consistent revenue growth, and a string of positive outlooks from analysts. In its most recent quarter, the company reported record-breaking loan originations, marking the highest lending volume in its history. That means not only are more customers coming in, but they're borrowing more across more categories than ever before. So what's behind this lending boom? First, product diversification. SoFi has moved far beyond its original niche, aggressively entering mortgages, small business lending, and personal finance products. Second, technological efficiency. Using an AI-powered underwriting and data-driven loan processing, SoFi has reduced approval times from days to minutes in some cases. This speed and convenience directly translate into higher loan volumes and better customer satisfaction. Third, strategic partnerships. Collaborations with payment processors, credit bureaus, and even traditional banks have extended SoFi's reach far beyond what it could achieve alone. Market timing has also played a huge role. The demand for digital-first banking solutions has exploded, particularly after the pandemic accelerated the shift away from in-person banking. Younger generations, especially millennials and Gen Z, are far more likely to choose a mobile-first bank than walk into a branch. SoFi has positioned itself perfectly to meet this demand, offering a user experience that feels as intuitive as a social media app, but with the capabilities of a full-service bank. Financially, SoFi's growth is impressive not just in volume, but in quality. Unlike some fast-growing lenders, SoFi has kept delinquency rates relatively low, a sign that its risk management processes are working. At the same time, net revenue has been climbing steadily, driven by both interest income and non-lending revenue streams such as investment fees and technology platform services. This diversification is critical because it means SoFi isn't overly dependent on one revenue source. Of course, there are challenges. High interest rates can slow borrowing demand. Competition from other fintech companies like Affirm, Lending Club, and traditional giants like JP Chase is fierce. And regulatory scrutiny is increasing as fintechs grow larger. But SoFi's management has shown resilience before, navigating through periods of loss, tightening margins, and even market skepticism. Their recent results suggest they have both the strategy and the execution capability to keep winning market share. From an investor's standpoint, SoFi is a fascinating case. On one hand, you have a company operating in one of the fastest-growing segments of finance, with technology that can scale and a brand that resonates with younger customers. On the other, you have a volatile stock in a highly competitive industry, meaning the potential for big rewards comes with real risks. For long-term investors, SoFi's story will be about whether it can sustain high growth without sacrificing profitability or loan quality. Looking ahead, several growth opportunities stand out. SoFi is expected to expand deeper into small business services, roll out new investment tools, and potentially increase its presence internationally. Its banking charter also opens the door for even more lending flexibility, and the ability to hold customer deposits directly. It's a huge advantage over fintech competitors without banking licenses. If management continues to innovate while keeping costs under control, the upside potential is significant. SoFi's record-breaking loan growth isn't just a headline. It That's a signal that the company is executing on its vision to be the go-to financial platform for the next generation. With a strong brand, expanding product lineup, and technology-first approach, SoFi is not only surviving in a competitive market, it's thriving. The big question now is, can this momentum continue in 2025 and beyond? If SoFi maintains its pace, we could be looking at one of the defining fintech success stories of the decade. But as with any high-growth stock, staying informed is key. So, what do you think? Is SoFi set to dominate the future of digital finance, or are there hidden risks investors need to watch out for? Let me know in the comments, and if you're hungry for more deep-dive stock analysis, make sure to check out my other videos. The world of fintech is evolving fast, and right now, SoFi is leading the charge.